Hey everyone, it's Green Spud Trades here, and I've got a special report here today about the stock market. So we've had a very good run, and it seems that at the beginning of February, market's finally having a little bit of a correction. I think the news media tends to be very melodramatic about this because for the whole month of January, the stock market's been up, up, and up. In fact, the S&P 500 went parabolic, which is something very unusual to see. Maybe it was a blow off top. I don't know. But it's good that we're pausing right now. So I have seen something I want to comment on is the number 666. So a lot of people on conspiracy websites, and I just want to make it clear that I'm not a conspiracy theorist, but I don't know. Maybe I am because I'm going to talk about this. So a lot of people were saying that it means something that the other day when the stock market declined, the Dow Jones average declined 666 points. So let's see. So on February 1st, the close for the Dow Jones Industrial Average was 261.87. Okay. 261.87. And on February 2nd, the close was 25521. 666 point drop on February 2nd. I think it's funny that people are kind of freaking out about this because, market, you could probably find all sorts of weird numbers in its, in you can probably find all sorts of obscure patterns if you look at enough data. I mean, it's kind of like staring at clouds. You'll probably see shapes of things in clouds or whatever it is that you want to see. But what I think is kind of fun to think about is you go back to the very bottom of the Great Recession as far as the stock market goes. You go back to the date of 369. Yep, you heard me right. The date 369, March the 6th, 2009. What is it? No, that's SPY. SPX. And the S&P 500 bottomed at 666 points. The S&P 500, the very bottom of the Great Recession stock market crash. So, I don't know. Maybe there really are some very wealthy people out there who have the ability to exert some control here. Okay, so you could look at Bill Gates, Jeff Bezos. I don't think those guys are the actual richest people in the world. I think there are a lot of individuals, families, groups of people who control a lot more wealth. And when you see Bill Gates and Jeff Bezos, those guys, they're very wealthy, but they're just the tip of the iceberg. There are much older family fortunes out there, and those people don't want to be known. They don't want to be seen. and they know how to hide their money. Some of them might be on the billionaires list, but the journalists who put those lists together probably can't find all of their assets. So it wouldn't surprise me if there are people out there who are trillions of dollars wealthy. And I don't know, maybe they have some fun with us in what they do with the stock market. And it's plausible. It's a plausible theory. It's a little bit of a conspiracy theory. But if they do enjoy poking fun with us, then there could be a 666 at the beginning of the bull market and a 666, well, on the Dow Jones Industrial Average at the very end of the bull market. And the reason that I think we might be at the end of the bull market is several factors going on. We have a period of monetary easing by central banks switching to monetary tightening. So the Federal Reserve is raising interest rates, and then when the interest rates go up, there's going to be more investment options. So right now, a lot of jobs in the economy, a lot of startup companies and such, they're funded by things like venture capital money. What's going to happen when the interest rates rise and there may be other investment opportunities? People won't be throwing their cash as much into stocks and securities and venture capital things. It will pay to sit on cash. Uh, it will pay. It will pay to have money in the bank. So people, I think, will get a little bit more conservative with. I mean, certain groups of people will get more conservative with their money, and what could happen is some of the funds that are out there could freeze up a little bit, especially if the Federal Reserve continues to tighten and they bring up interest rates to a more normal level. Um, that could be the start of a recession. It is what caused the Great Recession, in fact. Interest rates were near zero for the mid 2000s. The Federal Reserve raised the interest rates, and then that's what triggered the collapse the of the housing market. It was that plus a lot of bad mortgages that were written. So things definitely change when interest rates rise. Now, the other reason that I think the stock markets, um, the stock market right here might be at a significant turning point is I am very concerned about the blowing up of the XIV and SVXY securities. So there's this inverse volatility tracking note, and just look here. I mean, this was a real fun thing to trade, and it used to be very reliable. For those of you who are unfamiliar with it, it's supposed to um, be a bet against volatility, the VIX index on the Chicago Board of Trade, and it uses VIX futures as a means of the underlying security that's derived from. And the VIX futures, let me show you, are in this perpetual state called contango. Oh wait, no, this is contango. They're usually in. Oh yeah, this is backwardation. They're usually in a state of contango, which means that this curve is usually sloping up. And what happens is when you roll over contracts, you lose money. And the XIV profited tremendously during this period of monetary easing because the VIX was low and this curve was always sloping up. So rolling over VIX futures constantly lost money, the XIV was short, so therefore it did the opposite, and it made money off of the contango. Let's see if we can correlate this to the. Okay, so VIX, I mean XIV right here. These charts. Okay, so that's the approximation. So yeah, anytime the VIX spiked above its long-term average, which puts it in a state of backwardation, the XIV took a little bit of a dive. So like right here during the U.S. Treasury crisis, that hurt the XIV. And anytime you had a spike like this, it would drop a little bit. But then the VIX would drop down, the futures would go into contango again, the XIV would start making money. And this worked very well for 8 years. But then something very unusual happened it was just on Monday evening. So the XIV tracks the daily movement in the VIX futures. And the one thing that could destroy the fund is if the VIX futures double, because when you're short, if the security doubles in price, then you lose all of the money that you had in the security. And the XIV, it basically had a liquidation call when the price of the futures doubled. So what happened was on Monday we had a volatility event that was never seen before in the history of the stock market. The VIX more than doubled in a single day. That's a pretty big deal. And it caused the XIV's underlying security to be affected by that, and it completely wiped out the value in the XIV. And 8 years of gains were completely erased. I think this is a significant event because we've had corrections before. And I did a blog article about this, talking about how unusual this was. We've had many corrections and drawdowns in the stock market. The S&P 500 only went down 4%. That's something that we've all seen before, and it just totally caused a volatility spike like we've never seen before, and it obliterated the XIV, which means that there is fear. Fear suddenly took hold in the market. I don't know, for whatever reason. You could blame the algorithms. You could blame the VIX being at 10 for so long. I don't know, whatever it is, but that is a remarkable change that happened in the market. And this event, it makes me think very much of a company called Novastar Financial. So back in, it was early 2008, there was a subprime lender, a subprime lending company that was the first major blowup of the financial crisis of 2008. And this company, I remember I found it on the stock screen, and it had a 15% dividend yield. That's a pretty unheard of dividend yield, especially at that time when most dividend yielding companies were yielding about 2, maybe 3%. And the market dropped a little bit, and then it recovered. And then Nova Star Financial was forgotten for a while, and then it was business as usual. But that was the first rumblings of a crisis that was about to happen. So let me point out here. I want to say that, yeah, so this like decline right here in January was the trigger of, it was triggered by Nova Star blowing up. Or, I don't know, maybe it was this, I'm not sure. In March, then soon after Nova Star blew up, we had another blow up that was much bigger. It was Bear Stearns. And then the one that brought the whole system down was the third. It was Lehman Brothers going under. I was a little bit concerned on Monday evening that there would be some type of counterparty risk that it could destabilize the financial system, because when $2 billion gets evaporated, there are a lot of funds that have positions in that, and then triggers insurance, and then if banks don't hedge properly, then they could go under, and then it affects other people who had nothing to do with the crisis at all. But fortunately, Credit Suisse was properly hedged against it, and they didn't have any adverse effect. So at least there wasn't a counterparty risk, but it does mark a significant change. If we are at the market top, what I anticipate will happen is that 2018 will be a struggle for the S&P 500 major indexes to try to make new highs. We might see a new high, but it would just be a fake out, and then instead of having a nice breakout where the S&P advances, it's going to quickly drop back down and it's going to fail. So that's how we're going to know that we're at some kind of a top. Very much like if you look at this 2007 chart, the market it was struggle. It was just kept trying to struggle to make new highs here, and I think it did in the fall. But then it then started making lower highs, and with every crisis, every recession, there's usually some type of a catalyst for it. In the previous one, the Great Recession was caused by faulty mortgages. In the one before that, it was the tech companies that were overvalued, the dot-com burst. And this time, what I think could be the cause of the crisis is easy money, and might even be the stock market itself that is the bubble this time. The fact that we had such a huge volatility spike shows that I think something is broken in the financial system. We don't know what it will be yet, but if we are at the tip of a crisis, you could expect to see a lot of investment money getting harder to find, which will shut down the economy. So that's something to be vigilant about. I hope it doesn't happen, but we got that 666 number at the top. Maybe they're giving us a signal. That's the conspiracy theory for the day. So anyway, that's just a little market analysis, and see you next time.